This is for sure the story of the week, maybe even of the month. Leopold Aschenbrenner, the wunderkind from Silicon Valley, born in Germany, went to the Green Party when he was a teenager and advocated for a more just world, then decided that he has a great opportunity in Silicon Valley, wrote some nice little memos, and then got lucky to jump on the wunderkind train of Silicon Valley, which is a very magical train. You never know who gets on there. You need to hit a certain behavioral pattern that matches the ideas of Silicon Valley tycoons, what it means to be a wunderkind, and then suddenly you get a lot of money. So Leopold was lucky enough to get a lot of money from Silicon Valley investors. He's only 23 as of today, and invested that in some no-brainers like Anthropic. And that was back in 2023. So he got a little lucky, got into a great startup and made a lot of money, because if you invest in Anthropic, naturally you get lucky. And that is exactly what saves him right now, because after he did that, he got even more money and decided to venture out, no pun intended, into the dangerous world of hedge funds. And he went beyond private investments into liquid investments. And that is a very different game, in case you're familiar with venture capital and with hedge funds. Because in venture capital, the world is simple. If you're well connected and you have a bunch of money and you're sitting in Silicon Valley and you're investing in a bunch of startups, you always get rich, unless you're really bad at your job. It's a much lower pressure, a much less dangerous area, because you have a gated community. You're an insider. You just drop the money. And a lot of Silicon Valley investors famously say you don't even need to know anything. You just spread your bets. And the more you spread it, look at Y Combinator, look at SV Angel, the more money you make, because you're just hitting the home runs. So that is the world that gave Leo a lot of money. But then he decided, I'm very smart. I can invest in public stocks. But that is a very different world. It is a much bigger market. It is a much more dynamic market. It's a market full of little sharks. And we will get to one of these sharks in a second. And he started gambling a little bit. He started using a lot of leverage in his fund. And you guessed it, it blew up on Wednesday last week, because he made a bunch of wrong bets. He bet on software and he bet against the chips, or he bet for, he caught the market exactly at the wrong inflection point, and he used 4x leverage, which fundamentally led to a margin call on his public equities, and he couldn't fulfill the margin call, and that is how he got actually killed. And here is his savior, Ken Griffin of Citadel. Not a beginner, not a wunderkind, but a very, very savvy hedge fund investor. The head of Citadel, one of the great investment firms, one of the most savvy investment firms. And very likely he was a shark circling this whole poor Aschenbrenner situation and prepared the takeover, probably helped a little bit liquidating the fund in the first place with his comments about the Fed, which were totally wrong and totally not dumb. They were probably very on purpose by Ken, because Ken is a smart cookie. And he said, the Fed is going to hike rates, which of course the Fed didn't do on Wednesday, but everyone now got nervous. And all of that led to the debacle where Ken had to jump in and actually purchased the assets of Leopold's fund, which is ironically or unironically called situational awareness. Hey, on this channel, we do something very important. We deeply analyze, understand, and predict capital, AGI, and politics. Not just to beat the markets and make a lot of money, even though that's important, but also to build a new society and make the future good for all of us, the pioneers. If you want to help me on this journey, you can do that by doing a very simple thing. Like and subscribe. It helps me a lot. Thank you so much for your support, and let's get back to the video. The lack of which led to its implosion. And Leopold Aschenbrenner Citadel Awareness Fund peaked near $45 billion, can you imagine this, in early July on leveraged semiconductor and AI infrastructure positions. But then he shorted a bunch of stuff, he went double long, he was on margin. Margin calls then for significant sales at discounts, reducing assets under management to approximately $10 billion, which sounds still a lot, but it's not a lot if you start with 45 billion. And it's probably a little less than 10 billion where it was liquidated. And in case you didn't know that, if you get margin called and you have to sell your positions and you have significant positions in only mid-sized stocks, right? Some of them, he was in a lot of hyperscalers and neo clouds, and the neo clouds and the smaller companies probably broke his back. I covered this here. You saw he was in Nebius 30%. That's a lot of exposure. SanDisk 19%, lots of exposure. And you know what happened to SanDisk over the last few weeks? He was in Micron. I got a little screw in Micron, but I was a little more cautious than him. On Bloom Energy, CoreWeave, TSM, and so on. And you can imagine what happens with this stuff if you are 4x leveraged. And if you have that, then someone has to bail you out, because you cannot just sell your stocks on the stock exchange. That would blow up and implode the prices even further. So you need a block buyer, someone who steps in and outside the stock exchange, just takes over all your stocks in a block transaction. And that person needs to be able to act very quickly on a very large amount of money, probably 5 billion or whatever was left in his public fund. And that person was exactly this man here, Ken Griffin, and that is the big story of the week. Why is it such a big story? Because this story actually resembled something that is much more important than just a little fund blow up. It was an iconic situation because it actually changes the way the market behaved. Okay, it changed the way the semiconductor and the AI stocks traded. It even affected Tesla and other stocks. So the massive implosions that we saw in the market in July, the worst month in the history for the last 30 years at least, the worst drawdown in momentum stocks, worse than 2008 crisis, worse than the dot-com crisis. It was the worst month in 30 years in terms of drawdown of momentum stocks. And that means something. And at the center of this entire thing stood Aschenbrenner's fund and this whole takeover. And what that actually means for stocks is a very good question that we will cover today. And we will do so in a new format. By the way, we will have coverage of the individual stocks and everything that happened in the weekly brief. And we will go right into it and see how this affected the market and our favorite stocks. We also had earnings of Amazon, Meta, and Microsoft, of course, and that influenced everything too, because it happened right at the moment where Leopold blew up. Wednesday night, Leopold was finished. Then Microsoft and Meta reported earnings, and I will go into that in the weekly brief. And then Amazon on Thursday, and I said right when it all happened at the Fed talk on Wednesday, in the last hours of Leopold's fund, what that all means. And before we jump into the weekly brief, last comment, there is a lot of talk about Leopold still being up 80%, 60% year to date on his fund. We have to understand that if you are in Anthropic, if you have a private investment in Anthropic, that thing is up 159% year to date. Maybe even 300%. It depends when the last round exactly happened, if it was in December or January, December 2025 or January when it was exactly closed. But Anthropic is up 159% minimum. So if you have 5 billion in Anthropic and you are up 60% year to date and your Anthropic $5 billion stake is up 159%, that tells you a little bit what happened on the public equity side. Very likely, if that is actually what everyone means with the 80% or 60% up, it means there are massive losses. He's deeply in the red with the public fund. But now let's get into the weekly brief and look at some more details here. To view the full brief, go to pioneerlens.org and there you will find the weekly brief. And every week we are covering capital markets and your favorite AI stocks, including Tesla, SpaceX, and many other. You shouldn't miss that. Also in the weekly brief, by the way, we have a segment AI Frontier where we cover the latest in AI Frontier models so we understand what the future brings. And we have a new segment, Politics, where we cover all the transformative things that are happening in the United States and Europe. So check it out. See you on Pioneer Lens.